paid my dues time after time. Patrick, stop singing. All right. Stan Weinstein, stage analysis, Mexican peso futures, trying to see if the volume cues are more in line with confirming breakouts than with the spot Forex. I'm keeping a sideline, reading up discussions, boards, debates, people having. Don't mind that. Gives me clues to what to look for, but I like doing it. Sometimes I'm a slow learner, but I have to go through it, come to my own conclusions eventually. That's why I always have risk and money management. If ever my errors, I'm wrong in my ways, or they're not the most effective, then my money management is going to protect me, live to see another day. And guys, I don't know how many times my drawdowns have been minimized by a series of errors because I wasn't seeing clearly. I was emotional, affecting my trading. But then I took a step back, and man, since I have money management, never lose 1% of my NAV per trade. And even if my drawdowns, I have 5 in a row and I'm down 5-6% from peak to valley, no sweat. The damage is like minimal, not scary. I don't have to think about doing a holy grail. So that is one cool thing, because you want to learn. You want to change things sometimes. You want to try new things. It's natural, curious. But the money management's there to make sure that in case of a bad idea, then or just the application of that idea, then you're protected, guys. Okay, Mexican peso futures. And this one has not had a good life against the US dollars for years. 2006 is 10 years, 2016 20 years. So that's been on the downtrend for a long time. That is nasty, guys, nasty. Top pattern, breakdown. Let's go look at that. Sweet, sweet top pattern. You already had one here. Smaller target, reach. Bigger target, reached. And you get big target. But these I don't like too much, guys. Why? Because I like it when there's more consolidation close to the breakdown line, going through down parabolic way. Single retest of a previous resistance. That's for me, that's not super duper pattern. That's more, I have resistance here, support here, sorry. I might have a hiccup along the way. So you still want to enter. And that's just potential congestion where the price action could have actually bounced back close to the 12-month moving average or previous breakout, breakdown line, and then go back down, etc. And then maybe eventually consolidate here. And then I would say, okay, I have a bigger pattern here. Oh, cool. Control Z works. So that's the way I see it. But you see, played the Stan way. We're going to go look on the weekly. This is a nice drop. And classical charting principles. Good, they've given me most of that run. Hard to tell, guys. Let's say if I take the greediest of targets, which have been here, top to bottom. Add it to breakdown line. Whoa. I would have got a good chunk of that ride, guys. But that's a greedy target, right? Least probable target. And then that's still pretty. So that's a nice stage 2. That's probably going to look good. Stage 4 on the weekly chart. Guys, Patrick draws straight lines. What do we have here? This is probably going to look like a stage 4, stage 2, stage 3, stage 2, stage 3, stage 4. So we're probably close to a stage 4 right now, or sideways move. What's important, like I showed in the previous podcast with the Swiss franc, is you're going to want to identify, you're not going to play anything until you have a breakdown or breakout from at least the closest of the patterns that are forming close to price action. So this is monthly defined resistance, monthly defined support. Look, if you're not breaking below that, then that stage 2 or stage 4 breakdown might be just a small one, might just fizzle out. You want to increase your chances by making sure the higher trend is in your favor. So here are my 2 lines. Let's zoom in. Let's zoom. I just want to go check out that crazy breakdown here. Yeah, it was right here. See these candles here? Let me go back. So you start breaking down crescendo volume. This is what I'm observing, guys. Oh, look, this is twice the average of the previous 4 weeks, almost. That's the best I got for now. Oh, here too, look at that. That's what you want to see. Twice the average volume. But it doesn't mean we would have played, because our monthly defined breakdown line was here. We have the Ichimoku cloud. Well, it's not support, this is resistance, but you're below it. And here's where you would have entered. Underperforming the US dollar index, 30-week moving average declining, and price action below 30-week moving average right here. This candle right here. You would have entered. You had these spikes here, and plus you're having crescendo volume confirming that the downtrend. Price action sideways move, and then after that starts picking up again here, guys. Look at that. Whoo! Break. And this is pretty nice, giving me some why do I do that? And that's a nice stage 2, guys. Look at that, always below 30-week average. Here you would add some exit signs right here, but doesn't matter. That means you're probably entering a sideways move or slowing of the trend. If ever you have another signal to get in, you get in, or else you just move away, guys. And you see it was getting close to the end. You had another signal to get in here, but it didn't quite pan out. And that's one of Stan's premises also is if you're too advanced in a stage, and how do you know that? Well, when you start having warning signs of exits like this, trendline violations, these are signs that the stage is advanced or getting close to the end. So why risk it? The entry, you have to realize that the good entry was here, and anything under that, maybe the next one or 1 or 2 consolidation continuation breakdowns you could have played, but your chances after the 3rd or 4th, that means you're just probably going to get lower and lower, less chances of continuing that ride, and you're better off looking for embryonic breakdowns or breakouts. And that's what brings us here today, guys. Stage. Nice stage 4. You see small stage 2 at the bottom, embryonic. And now we're back within that range, guys. And that's how we're defining it. The more we stay here, sideways move, that cloud is thinning and thinning. Less support, less resistance. So if we break to the high or the low, we're easy breezy, guys. No signal now, because the 30-week average is not angling downwards, even if we're underperforming the US dollar index, even if the price action, I think it's not even below yet. No, it's above. So no man's land right now. We just have to wait. Volume is dying down, so we're going to have to see on the weekly how this decides to behave. Ideally, want to start having crescendo volume here, and we want candles starting to go down like that, then break down, close below the monthly defined breakdown line at 49.68, 49.70, and that's pretty good for the Mexican peso future, guy. Yeah, so is this just another sideways move before the continuation of that crazy multi-decade, wow, look at that downward spiral? Well, the trend is definitely downwards, right? If I draw a channel here, so instead of guessing the bottom, you have more incentive to play a continuation breakdown than a, hey, this is the bottom and I'm going to go continue to the top. All right, Mexican pesos, thank you. Keeping digging, keeping to try and understand what's happening. All right, guys, hope this was helpful. Ciao.